Hey, I'm Juan. Thank you for joining me. We got another Sensionics update. We finally have some news. We haven't heard any news from Sensionics, but there's a couple things that came out. Nothing regarding the FDA approval yet, but maybe some clues on when it might come out. Let's check this out. The first positive thing, and this is kind of like a preview of what's to come when the Eversense comes to the United States, the 180-day. They now have fully remote monitoring for both iOS and Android system. What that means is a person with diabetes can give access to their trends to a family member. It can be, let's say you have your mom, an elderly grandparent. You can monitor their glucose trends from anywhere. And if you see a drop and you get an alarm, you can call them, check on them. You can call the ambulance. There's a lot of benefits for being able to monitor someone's glucose trend. They got CE approval, which is the equivalent of FDA, and they're going to be using that in Europe. So that is something positive for Sensionics, something to look forward to. Tim Goodnow, CEO, said, "We're pleased to offer yet another tool for our Eversense users in Europe, now enabling access to this important feature for all our customers." So the app is called the Eversense Now app. Eversense users can enjoy the added peace of mind that comes with knowing friends and family can remotely view real-time glucose data, see trend graphs, and receive real-time glucose alerts from anywhere. Now, someone mentioned in the comment about this that this means they don't have to do calibration. That's not true. You still have. This has nothing to do. One has nothing to do with the other. You still have to do calibration, which is you prick your finger, you get the blood, you test the sugar in that direct blood, and you compare it to the readings from the device, and you'll get like a difference to make sure it's close enough. So that's the first positive thing here. The second positive thing, they had an article that came up from TipsRank, and it said Sensionics holding analysts expect 79% upside despite unprofitability. Well, we know Sensionics is not profitable right now. First of all, with glucose monitoring, there's a lot of R&D expenses that come with it, and there's a lot of marketing expenses. So they have to have their sales up to be profitable. Even Dexicom, it took them a while before their net profit was positive. But this analyst states that the company has applied for 180-day, and he anticipates that once they get approval, they will have a price of $5, which is a 79% potential upside. And he talks about the strengths of the company, and they mentioned the Eversense XL. The company has applied for the 180-day. So everything we mentioned in several videos, nothing new except that it has a 79% upside potential. So that's a positive article that just came out December 21st today. And the next thing that came out today, yesterday. Do options traders know something about Sensionics stock we don't? So this is a very interesting article. Either there's a lot of speculation, and that's why option traders are buying specifically options out in January 21st because they anticipate that that's when the FDA approval is going to happen. If there's some sort of inside knowledge about that, there's no way I can confirm that, but I can imagine that there was some delays. There was some other companies that had delays, and maybe they just anticipate that in the first month of January, they'll finally get FDA approval. So they're talking about the January 21st, 2022 $5 call had some of the highest implied volatility of equity options today. Implied volatility shows how much movement the market is expecting in the future. So if there's high, like if, for example, a company has earnings that are anticipated to be extremely high, then the implied volatility might be higher. Options with higher levels of implied volatility suggest that investors in the underlying stock are expecting a big move in one direction or the other. If we go to Webull here and we see the $5, we see that 170% implied volatility, which is extremely high. 5,300 open interest. For the $3, there's 12,000 open interest. So I would imagine that it has that high implied volatility because they're anticipating that by then they're going to get FDA approval. So we look at the chart, it's basically just been dipping and then getting bought up, dipping, selling off, then getting bought up. And that's been the pattern pretty much for a while. It has been on a downtrend for a while. looks like it's starting to consolidate and possibly now going towards an uptrend. So if we look at the daily chart, kind of looks like it's going on an uptrend. From here, it was going on an uptrend, then kind of broke that. So let's see if it's starting to go back on an uptrend. If we look at the Fibonacci retracement, it may bounce down here. If it does drop any more, $2 would be great support just because you see here it consolidated around $2. And this is where the Fibonacci 78% retracement is. But right now, it just kind of like broke the 61% here, the 286, and it's just been testing that. It broke below it and it kind of tested it right here, but it wasn't able to break it. If we want to confirm that this is in an uptrend, it needs to break above this 280, 287 area, and then 287 needs to become support. And then hopefully after that, it'll go on an uptrend. I do want to see this thing turn around and kind of go back on an uptrend, and then that'll help the momentum and then watch it boost once it gets the FDA approval. We see here the MACD crossover. It looks like it's starting to just happen. The stochastic also kind of crossover. So it does kind of look like it's starting to form a reversal, which is good. I think traders are going to be disappointed if the FDA doesn't happen this week, but I highly doubt by this time, if we haven't heard or seen anything by now, that we're going to get FDA approval, which is fine. There's other companies that are also delayed that were supposed to come out this month. Specifically, a glucose pump company. They were supposed to get FDA approval for one of their devices this month, and they're going to be delayed. So I think Sensionics is right there with them going to be delayed. So that was just a quick update on Sensionics. It's still a hold for me. I've been talking about this company for a long time. I think they're right at the brink of that FDA approval. It seems like a lot of traders are anticipating sometime in early January, and that's why the implied volatility for January 21st is so high compared to all the other dates for Senseonics call options. So we're just gonna have to wait and see. Nobody knows. But the good thing is that they've been using this product in Europe, the 180 device, for quite a while with no issues, no major inaccurate readings, nothing that caused major harm. So that's extremely positive, and it's not like just a new pharma drug that's never been approved and it's pending approval. This already has been proven. It's being used in Europe, and they're even adding features to it, like the Android app feature that allows you to monitor glucose from anywhere. Still bullish on this company. I still think it's got potential. So we're just gonna have to keep watching, keep holding. Nothing's gonna happen during the holidays. And thank you for watching. See you on the next video.